Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Alan Schnur. Thanks for being on the show again, Alan.
Hey, Whitney, we were just reminiscing our past. What number was I on the show when you first started?
You were show 03.
All right. Well, good to hear that you've done over 507 more. So congratulations to you, your listeners, and all your success.
Thank you. You as well. Yeah, that was aired October the 24th, 2018. So yeah,
Wow.
it's great to have you back, Alan, and hear about your success as well.
How many kids have you adopted since 2018?
Just one since then.
Oh, okay.
Two before
right.
that, but just one.
Congratulations. You're wonderful what you're doing.
Thank you. But for the listeners, a little about Alan. With partners and through syndication, he's personally bought more than 2,000 apartment units and managed more than 7,000 units with his firm. Has owned numerous medical, office, storage, warehouse buildings, and over a dozen shopping centers around the U.S. Also builds multi-million-dollar custom homes. Progressed into other types of commercial real estate and other ventures encompassing private lending, student housing, and senior apartments. So Alan's done almost every kind of real estate and been successful or asset class that I can think of. But one thing that his bio didn't say that he also has a book that I would encourage you to check out called The Cash Flow Mindset. So anyway, as a listener, I just encourage you to reach out to Alan and also to go to Amazon and check out his book. It's also on Audible, by the way. That's where I picked it up. So, Alan, give the listeners an update, a little bit about your focus right now, and let's dive into your superpower and just from your history, the 15 years at Wall Street, and what's happening right now as well.
Sure. Okay. Well, thank you for that warm, beautiful welcoming. And I guess why don't we just start off with Wall Street right now, because there's so much going on in the world and worldly events are happening, and we've seen the Dow Jones just plummet here over the last 6 or 7 trading sessions, down almost 3,500 points.
Yeah, tell the listeners what you did there. Like 15 years.
Sure.
What were you doing?
So for around 15 years, I was a stockbroker at one point in my life, and then I graduated into a commodities broker, and I actually worked in the World Trade Center, and I was fortunate enough to have left the building September 10, 2001, an event that changed my life, because 24 hours later, I woke up in a hotel room and to find out that my firm was really decimated that I worked for. Cantor Fitzgerald lost 700 out of 1,000 people, and I lost 40 out of 44 teammates in my division. And I just found myself in a hotel room in a really bad spot. I was grateful to be alive. I was suffering. I was in pain. I was survivor guilt. Thankful for all the first-time responders that rushed into the building. Just so much was going on in my life, and I actually kind of felt like it was the end of my life. But I spent a good 7 days by myself. I rewrote it. I decided that I wasn't going to play a small game anymore. I was going to go big and refine a few things in my life and take everything to the next level, see what kind of difference I can make in other people's lives as well. So fast forwarding a bit, I'd spent around 15 years in the commodity markets. So I got a really good feeling about how markets work, buy low, sell high, working with banks, working with institutional investors, and learned a lot about the energy markets and how all these markets seem to be connected with each other, people's retirement funds to personal investors. And look, right now it's a little painful. There's a lot of fear out there, and a lot of people's retirement accounts are somewhat at risk, being down 15% in less than a week, in a few days. So, I mean, look, hold on, right? You got to hold on. I've been there, and we've been through a few downturns over the last 20, 30 years. And, just 2 weeks ago, we were at all-time highs, and, hold on, maybe put a little more money in, double down a little, or average down, I should say. And maybe this time, if at all possible, diversify more. I mean, diversification is definitely one of the tricks of a well-balanced portfolio. If it's stocks, bonds, commodities, or if it's single family houses, multifamily apartment complexes, or shopping centers. I keep a mixed bag of all those different investment vehicles in my portfolio because, Whitney, that's what they are. They're just investment vehicles. They're just like cars, you know. Which car is going to help you drive from point A to point B? Don't fall in love with one particular asset. Right now, I'm sure in the next 10, 20 minutes, we're going to start talking about shopping centers. I like shopping centers, not because I love shopping centers, because for me, that's where I'm finding the best returns out there in business. And to be in business is, as far as I'm concerned, is to make a profit. If I wasn't in business, then let me just go and enjoy the rest of my life and be grateful and see who I can help and explore the world. So I'll slow down. I'll let you drive a bit, but that's a quick introduction. So we can talk about anything. It's just over the last 2 years, because we really haven't spoken in, I guess, a year or a year and a half. I know we see each other on Facebook. I've built 6 ground-up construction storage facilities for around 500,000 square feet. I actually bought over 24 shopping centers, 100,000 square feet of warehouse in Colorado and Arizona and parts of Houston. I'm building a $5 million spec house here in Houston. And that actually came out of an evolution of which you didn't mention. I bought and sold over 400 houses. That's how I got involved in real estate and started divesting away from Wall Street back in the day. And I, over the last few years, sold all the housing and decided I was going to get more involved in triple net leasing, commercial real estate, kind of real estate that runs on its own.
So, Alan, we're grateful that you are here and that you weren't in that building that day. It gives me chills thinking about it, and I would encourage listeners to go back and listen to show WS03. And I know Alan talked a little more about his story and about working in the World Trade Center buildings and his buying all the single family homes and how he got into syndication and some of those things as well. One other thing I wanted to highlight about Alan is how you're helping your son build a real estate empire as well.
Are you keeping up with him on Facebook?
I haven't been, but I've seen a photo you posted. I just thought it's incredible and noteworthy for what you're helping him do.
Let's talk about that. So my son is 15 years old, and I decided that, this might come from Jim Rohn, but Jim Rohn had a saying, a great philosopher of the 20th century. He would say, well, first of all, he would say, learn how to take a bicycle and rent it for $1. But he would also say, you just got to teach your children. You got to teach your children how to make money. And I'm a true believer in, one day my son's going to have a job in life. And I hope it's the job that he wants, because if it's not the job he wants, then he has to do something he doesn't want to do. But if he has this real estate in his life, the real estate you're always talking about every single day, well, then it's a choice. And we all want that for our children. And I want that for your children. I would like them to have a choice when they become of age, when they have to go out in the world and make a living. So that's what I'm doing with my son. I'm teaching my son, how to make a choice for himself and how to have those choices for himself when he gets older. And right now, I've done a few house flips with Jake. And I participated a lot in those. But one thing that's made this last house flip very different from the other flips is that he made this one happen. He basically said, hey, Dad, you know what? You're not taking any of the profit. I know you have a small lending business, and I know you're not really doing single family house anymore. So will you let me drive the car? Will you let me go find a house? Will you let me work your broker? Will you let me meet the crew every Sunday? And will you let me keep all the profit? So I'm like, okay, I like what I'm hearing. So here's what we did. We bought a $86,000 house. He pays me a point a month to my lending company. He engaged one of my rehab crews for $35,000. They came to an agreement. There'd be 3 payments for $35,000. And I think that was like $11,333 a payment. And every Sunday after Hebrew school, we drove out to the property and he would write some checks and to make sure things were happening. And lo and behold, Whitney, it's all done. It came out beautiful. He's all on his own. The crew did everything they said they were going to do. And within 90 days, they took this really rough looking house and they turned it into a pearl, a gem, put it on the market. 48 hours later, he's in contract for $159,999. So $160,000. We're like 45 days out now from closing, and it's gonna be it's exciting. So now he's got this goal. Before he's 18 years old, he wants to have $100,000 in his checking account.
Wow. It sounds like he's going to do it.
Yeah, he's working backwards. You know, Stephen Covey used to say, work your plan your work, and figure out what you want and work backwards.
Well, it sounds like you taught him to fish, and now he's actually going.
Yes.
He's launching his own boat. You know, I just thought that was worth highlighting because I wish I had been taught things like that, and you know, from
you and I both.
Yeah, so I just wanted to highlight that because I thought it was so incredible and noteworthy. But I wanted to go back to just from your experience in Wall Street, and you know, a lot of listeners probably just lost 15% of their retirement account, right? And you know, they're probably hesitant now to jump out. Maybe some want to jump out. Maybe they're thinking, oh, maybe it's going to come back. And I just wondered, you know, what are you advising, and what are your thoughts about that?
Sure. Well, if it makes anyone feel any better, I just moved money around so I can jump in when I feel like we hit a bottom. And, you know, just like when I bought all the houses or bought all the apartment buildings, you know, I always said, look, I can't really find the bottom, but I can't really find the top. So let me scale in. So I just believe in scaling in. I've seen that for 15 years in the commodity markets. Very few individuals were talented enough to pick a top or pick a bottom. But so look, if you liked Amazon at $1,900 a share, well, now go buy it for $1,700 a share, right? Or if you like Tesla at $850 a share, you're gonna love it at $600 a share. So I believe in scaling up and scaling down, and in other terms, we call that averaging down. So right now you'd be averaging down, just look. Don't look at it every day. Put it down. It's there for the long run. Just like these houses. How do we create wealth in single family houses? You got to hold on, take care of them, put them down, and take a look at them 3, 5, 10 years later if you're on the buy and hold program. And look at what you paid down on the mortgage, the appreciation, the cash flows. Same thing with the stocks. Some of these stocks pay dividends. They appreciate. The companies do better. So let it ride. I don't think you should panic and pull out here. You already held it.
And you were also talking earlier just about diversifying, and it's obviously it's a great idea, right? And you love shopping centers, and I'd love to talk about that a little bit. I don't have many guests who are big on shopping centers, and so I would love to just you to dive into why you like shopping centers, and maybe let's talk about a recent deal.
Okay, sure. So I got to a point. You and I were talking about 5-year histories. I believe people get really excited about an idea for 5 years, and then maybe some of that newness dies out, and you got to keep your passion alive, or at least I do. So I felt my passion kind of waning in the housing business. 5 years of housing, 5 years of apartment buildings. I was ready to try something new. So I sold it all off. I sold a few thousand units, a few hundred houses. And for me, what was next really was shopping centers. I was pretty excited about them. Cap rates. I really love the cap rates right now on Class B and Class C shopping centers. I'm working on a deal. It's 125,000 square feet. It's in Gilbert, Arizona. Someplace where I would never buy a housing community, because I felt like when I owned the housing community, I needed to drive to them if there was a problem. But when you buy these kind of shopping centers, they're triple net leases. And what that really means is if something breaks, the tenant's going to fix it. If taxes go up, the tenant's going to pay for the increase. And if insurance goes up, the tenant's going to pay for the increase. So a lot of the expenses are definitely controllable, and they're reimbursable to the owner. So I like that. So cash flows are more predictable. And as a syndicator, and this is a syndication show, it's important. You really need your cash flows to be predictable. And I find that with the triple net leasing in the shopping centers. So where I have around 1 million square feet under Great Partners is the name of the firm. And we're always looking for investors and people that want to partner up. So 1 million square feet in a few different states. And one thing I really like about the business, Whitney, is the tenants. I'll just shout out some names that I work with recently because I had to renew some leases. Discount Tire, Subway, Starbucks, major grocery anchor stores, Ross, TJ Maxx, Lumber Liquidators. And when these kind of companies, I have around 125 to 150 of these type of tenants that actually trade on Wall Street. I call them discounters. I'm not going into the malls of America and trying to figure out how to turn that around. I'm not investing into apparel stores or electronics stores. I'm just investing into your everyday mom and pop shopping center. A lot of us still stop off, I'd say, a few times a day. I don't know about you, but I went out for my Starbucks this morning in one shopping center. I picked up my dry cleaning in another shopping center, and I bought some supplies in another shopping center. So today alone, I went to 3 shopping centers. So I just feel like some of these shopping centers are here to stay. I know there's a lot of threats out there. You know, people say, "Oh my gosh, what are you going to do about online and retail and everything's changing and Amazon's coming?" Well, I heard this really cool statistic last week. Catalog sales. You know, a lot of your listeners probably aren't old enough to remember, but in the 1970s, in the 1980s, we had something called catalog mail. And it so happens that around 10% of all retail went through the US mail via catalogs that would come in the mail. And that's what we see right now. 10% of all retail sales in the United States are online. 90% are still brick and mortar.
Interesting. And I'm glad you said that because I would have thought 90%. It was much different.
And not only that, in-store sales last Christmas were higher than the year before. So more people were going out to stores to buy their presents. I'm not saying, yeah, more people were buying online as well, but people were still going out. Look, people want to go out and they want to taste it, touch it, see it, feel it, maybe even walk home with it. So I don't know, they like the experience. And you know, I'm talking about this deal I'm doing in Arizona right now. Interesting enough, there's a new user in there, 35,000 square foot trampoline park by the name of
Wow.
Altitude, which is like the 3rd largest company for trampolines in the United States. The proprietor spent $1.2 million of his own money building out the space. He made that own investment with his own money. So that's another thing I like about these shopping centers. The tenants come in, they come in with their business models, they come in with their bank loans, and they invest in your real estate. I recently did a medical build out for a company by the name of BPL, which is a plasma company, in a 1970s shopping center. It's something I own here in Houston. It's a 150,000 square foot shopping center. It sits on a highway. It's got 300,000 cars going by it every day. And I had this medical user come in. They spend $2 million to fix their own spot on a 10-year lease. That's it. You know, that's it. You know, I don't have to do anything. They take care of everything. They're there for 10 years. They'll probably call me on year 9 to renegotiate for the following 10 years. So, you know, these are some of the advantages I like to, you know, have in my real estate career right now. I don't know if you remember this, but I called it the evolution of a real estate investor. A lot of us start with houses, then we progress into the apartment buildings, and then we progress into warehousing, storage, or retail. And I'm here to tell your listeners and your syndicators, you don't have to wait to get to the end. You can start somewhere in the middle. It doesn't take a genius to figure, you know, there's a lot of fear out there. Well, how am I going to rent my spots? You know, in my book, I give a scenario where I bought like $1 million shopping center. It was small. It had 6 slots, 2,000 square feet a slot, 12,000 square foot shopping center. 3 slots are full, 3 stores are empty. So trades on a true net operating income number. I buy the deal 50 cents in the dollar. It's $1 million deal, $300,000 down. So hire a leasing agent, believe this one was Collier's, and I believe this example was in Eagle, Idaho. Gave the leasing agent 12 months to go find 3 more tenants. He brought in AT&T, a hearing aid company, and a Taco Del Mar. Now I'm full. What do? I sell the shopping center for north of, I believe it was $2.2 million. We bought it for $1 million, $300,000 down, a 300% return. So that's it, 3 tenants. And I did that a dozen times, maybe even like a dozen and a half times. And then I decided to get bigger. And another thing I love about all types of real estate is because you get to measure your success through dollars and cents and square footage, right? So maybe in the houses, we count doors, and in the apartment complexes, we count units, and shopping centers, we count square footage.
Square feet.
And I mean, if you can get a penny, nickel, or a dime more per square foot, well, let me tell you something, that translates into millions of dollars, because some of this real estate are hundreds of thousands of square feet. So just do the math.
You mentioned you love the cap rates of shopping centers right now. And could you just elaborate a little bit on that, and why, cap rates on shopping centers versus, multifamily or some other asset class?
Sure. Good question. So you and I were talking earlier as well about asset classes, and some of the more popular asset classes right now are for sure multifamily, and then warehousing asset class is on fire right now because of all the manufacturing, the jobs coming back to America. And then we have retail, it's at the bottom. So, the 1, 2, 3, and retail's totally at the bottom of the pile. So look, supply and demand, everybody wants apartment buildings right now. So we're seeing a lot of apartment complexes, the B's and the C's trade 4 or 5 caps here in Houston, or 4 and 5% returners. And same for warehouses, because I'm doing warehouses, and it's 4 or 5, maybe 6%, depending on the tenant and the credit worthiness of the tenant. But when it comes to the shopping centers right now, since they're falling out of favor, people don't know what to do with them. We're seeing cap rates hit 10. I mean, I'm getting ready to buy a 9 cap on a $16.5 million deal, a 9 cap. And what's really changed, Whitney, over the last 6 to 12 months in the retail business, Wall Street finally gets it. CMBS loans, they finally understand what I'm talking about here, which is I'd rather have TJ Maxx, Starbucks, Wingstop on 5-year leases than other asset classes, okay? And in doing so, they jumped on the bandwagon. They said, these shopping centers, they're looking like really good investments, long play investments, income that we can count on. Let's start lending. So one of the fires, I believe, that fueled the multifamily house business is the fact that you have Freddie and Fannie and you have low interest rate environments, right? So we didn't have that in retail shopping centers, but we do now. For the first time, for example, I'm borrowing $10 million and change at 3.4% interest only, 5 years. It's going to close in a month. So, and that's as good as any, I believe, as good as any multifamily loan out there right now. So now that we finally have the lending, I think it's just a matter of time where you start seeing this asset class rise through the ranks. Look, I used to always say, you had a bunch of house flippers. They did it for so many years. If it was 1, 2, 5, 10 years, then they say, okay, what's next? Or maybe they buy into the Alan Schnur evolution of a real estate investor philosophy, and they say, okay, I really got to do something next. I'm burning out here. So then they go, okay, I'll tell you what's next. The apartment buildings are next, and the same thing. They go through the apartment buildings, and then they go through the shopping centers. But it's the same people going down the line. Like your real estate career, I believe you just told me you're getting ready to close another multifamily house deal. And I bet you started off with the houses. So it's like, I know this, mark my word. What number show is this, Whitney?
This is 510.
510. So Okay, we're just going to remember 510 because I know you're going to do a shopping center strip. Only because you're going to say, Alan, you were right. I did so many apartment complexes. I got a little bored, and I also saw greater returns, and I wanted an easier lifestyle. So I got into more commercial real estate. I got into the triple net lease business. So I started buying shopping centers. So it's just a matter of time. I believe you're going to be a real estate investor for a very, very long time, especially with what you've done over the last few years with your life. So it's just a matter of time before you get involved in all classes. So you're going to take all your experiences and you're going to parlay them into the next, into the next, into the next. Mm. So, and it goes back to one of my philosophies. If you could do it once, you could do it 10 times. And if you could do it 10 times, you can do it 100 times. But, you know, for everyone out there, please, you got to do number one. It's the hardest. I agree. It's totally the hardest. It just takes the most confidence and, you know, courage, whatever, listen to more of these podcasts, take more classes, go to the networking meetings. But once you get number one done, oh my gosh, you're going to get to 10 so much quicker because one alone is so much harder than the next 9 that you're going to buy.
Right.
And the good news is, oh my gosh, if you get to 10, the next 90, no brainer. My money's on you.
So, you mentioned like that one property where it was half occupied. And I know a lot of listeners that aren't into retail, they're like, well, wait a minute, what if you lose a tenant, or that's like a big hurdle, it seems. But how do you get funding for something like that if it's half occupied?
Okay, yeah. So you're going to have to, like anything these days, you do have to buy stabilized assets. So you're going to have to take apart your capital stack, the way you borrow money if you want to buy something that's not considered stabilized. And I can think of a number of ways. The first way would be hard money, just like you'd buy, a dilapidated apartment building, right? Because I don't believe a bank's going to lend you money on an apartment complex falling down either. So right. you can make an argument or an analogy between a falling down dilapidated apartment building and a half empty shopping center. Call those equal. So you got to, how do you do it? How do you tackle that? Hard money. In my world, we call it mezzanine debt. So it's just kind of like a bridge loan,
right?
Some kind of like interim financing so you can get to the permanent position. See it all the time. That's what happens in ground up construction. People will get construction loans, recourse construction loans. They can't wait to get everything built. They can't wait to get to like 80, 85% occupancy so they can refinance the recourse out with non-recourse debt and bring in permanent financing. So look, we got to take some chances. Bridge loans, hard money, and creative financing gets it done. I usually find when I come across a piece of commercial real estate that doesn't look bankable, the seller knows it. So I get them to take back some kind of some kind of creative financing, or maybe just carry the financing or a master lease. And the way a master lease works is, let's just say you own the $1 million shopping center, Whitney, and it's 50% vacant, and I want to buy it for $500,000. But I don't have $500,000. I make a deal with you. I'll say, look, you agree to sell me this at $500,000. You write this down on this contract. You give me 2 years to cash you out, and you let me do whatever I want to do with this shopping center. And in a sense, you're subleasing everything to me. So we call that a master lease. And then I turn around and I do my magic. I sprinkle my little pixie dust. I call up my friendly leasing brokers. I go to the meetings. I go to the network meetings. I go to the conferences, and I get some tenants in there. And then before I know, when I'm stabilized, I have a few choices. But my first choice would probably be go to the bank, get permanent financing, because now it's stabilized, and cash you out as fast as possible before you get any funny ideas. Let me give everyone a little golden nugget here. When you make that agreement for a master lease, go ahead and have that agreement signed like it was a done deal and put it in escrow. So there's no misunderstanding. Once you, sorry about that, once you don't you follow through and fill that center up? Because you will have created $1 million of equity for something that you bought for $1 million if it's 50% vacant.
And that
You follow
seller's
that?
going, yeah, you're going to hope that seller's going to wish that he hadn't signed it at that point, right?
Well, you know what? You paid him his money. You made him his monthly payments. And more importantly, what do we do in real estate? All of us. We're problem solvers.
Right.
We solve problems for people. And that's exactly what you did. So it's really, truly a win-win situation for both parties.
All right, Alan, a few questions before we have to go because we're out of time. But how are you prepared for this the potential downturn that everybody's talking about now?
The downturn. You know why you caught me off guard? Because I don't think we're really in a downturn. I mean, if you're talking about a Wall Street correction.
Yeah, I just mean that's what everybody's talking. Everybody's expecting some big, massive correction like 2008.
Yeah, I got to tell you, for the last few years, we've seen Wall Street come charging back. I mean, charging back like insane numbers. We might have gone down 1,000 points the other day. We can go up quicker. I mean, in like 10 minutes, we can go up 1,000 points. So I guess if I have to really answer your question, I purposely moved money from one account to another account so I can easily disperse it into my brokerage account. So I can buy some stocks when I feel like we're hitting some levels that I'm getting comfortable with. I am selling some assets right now to free up some cash to see if I can pick up some cheap real estate just in case something happens. And what can I say, Whitney? I'm always creating. I want everyone to create their best life possible. So I want everyone to make as much money as possible. So I just want people to get organized. You and I have talked about this before, morning practices. Just stay organized, know where your money is, know exactly what's happening, and stay liquid in tough times. But hold on too, don't panic. I mean, just think about what Warren Buffett would say and Charlie Munger, which is, when there's fear in the street, you should be buying. And when there's greed in the street, you should be selling. And I always found myself doing that. I mean, I always found myself selling housing over the last 5 years because everybody wanted it more than me. And now I'm buying retail for the last few years because nobody wants it. So call me a contrarian, but we make our own opportunities in life. And that's another reason why people listen to this show. They're looking to hear about new opportunity, or they need to be reminded, that courage is really just the result of confidence.
Love that. Wow. Number one thing that's contributed to your success.
Number one thing that has contributed to my success. Really the belief in myself. I'm not always sure if I'm doing the right thing, but if I'm a little fearful, then I know I have to follow through because I can't live with the fear. I have to face it head on. So fear makes me successful. I'm just as scared as anyone else. But if it's lingering within me, I got to do something about it. I got to take action. I got to do it once. And then you know what happens after number one, right?
That's right. That's right.
I'm going to get to 10 before you know it. So you really have to believe in yourself and stay calm, meditate, reach in, remember who you are, where you come from, your friends, your family, where you're going. Stay humble, modest, grateful.
And Alan, how do you like to give back?
I started a foundation with a really good friend around 2 years ago. Good question. And we funded it with a substantial amount of money. But in 2020, I've done something different. Usually I'll call up my CPA and I'll say, will you send over a few $1,000s to this hospital or to this cause? And I don't always feel it when I'm doing that. And I don't find myself giving enough. So what I'm doing this year, Whitney, is I'm walking around with checks from the foundation inside my iPhone. So I'm there writing checks. So I'm feeling it. So I'm building the habit. And by doing so, obviously it's reminding myself to be doing it more.
Wow. Love that, Alan. I appreciate you sharing that. Appreciate the way you give back, and just an amazing show. I love all the quotes. I love the way you've gotten where you're at, and just grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Sure thing. So greatpartners.com, greatpartners.com. That's 8, the number 8, partners.com. And then you can get a good look at our portfolio and our syndications. We're always looking for partners. Another way of getting in touch with me, as crazy as this sounds, I give out my phone number, Whitney, and people text me all the time when they hear these shows. I love it. 713-503-5908. You can text me if you want to join. You want to learn more about my Gilbert, Arizona deal. I'd love to talk to you about it. And lastly, there's AlanSchnur.com, AlanSchnur.com. And there you can find a few hundred educational videos, just, if it's from the apartment buildings or the single family houses or the shopping centers, you can see what I'm up to and teaching, and it's there for free and giving back. And look, cash flow at the end of the day, I want everyone to be happy. I want everyone to live this incredible life. And I believe if we can help people create cash flow in their life, Whitney, that, maybe we're, helping someone, find the next cure for, whatever plagues coming our way, or whoever needs money. It's, that's the best way I think I could help somebody, is teach somebody what I'm doing. It's no secret. I've always felt like I was an average person. You just got to put your best foot forward.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.